Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, Chief Options Specialist, and in this week's Chart of the Week, I'm going to show you a recent example that TastyTrade recommended and show you how the Master Trader technical strategies helps any TastyTrade methodology or others who use a mechanical approach or any other approach to the market where they do not use charts for directional bias. I just grabbed the recommendation out of their email. They're saying if you think the bad news on Apple, which caused the gap down last week, might trickle down to the rest of the NASDAQ 100, the ETF QQQ. If you want to put on a bearish call, they're recommending a out-of-the-money bear call credit spread with 42 days to expiration. And they're saying that you should have a 78% probability of making 50% of max profit. Well, this is purely just off mathematics, and they don't take a directional bias, and we think that's just a major flaw in trading. They have an amazing financial network there on the internet. They have great research, but it's our opinion that anybody who doesn't look at charts is severely limiting their ability to succeed in the market. And, you know, bad news on Apple, what if, you got to put that in the context. What if Apple's been down 20 days in a row and that's an exhaustion gap? Then I'm looking to go long Apple, but I can't determine that unless I look at a picture of it. Here was the daily chart of the QQQs when they recommended this trade. And they recommended it at the conclusion of this day. So the Qs actually gapped up, and I get emails all the time from folks sending me the TastyTrade recommendations, and I just simply make a review of, does the chart support the recommendation? Many times, unfortunately, it just doesn't using Master Trader strategies, but in this case, it actually did. And so that's the lesson I'm going to show you, though. This QQQs are in a downtrend. We have a daily 20, daily 50 period moving average. We had a red bar, looked like it was rolling over. So it's actually an adequate pattern to sell an out-of-the-money bear call credit spread, but we would have done it with a much smaller days to expiration, and here's why. The Qs got climactic. The market internals that we have reviewed in the past, and in fact that was last week's chart of the week, got climactic, saying imminent, Will Rogers, that there's going to be a big bounce in the market. Well, the diamonds on this green day here actually set a record and closed up over 1,000 points. Even though this is a downtrend, we have to respect the power of this wide range bar, and we're actually looking for it to set up some type of retest pattern to get bullish. So we were also bearish on this close last Thursday. The entry for a bear call credit spread is under the low of this day. But if you don't read charts and you just blindly put on a bear call credit spread, you're in big pain right now. The QQQs from Friday's open to close are up more than $4. So if you put on this bear call credit spread at the market open, it's in your face. $4 of delta went against you. But what I want to show you is using technical analysis, intraday analysis, gap trading, you could have avoided this loss, provided you put it on, of course, very simply by looking at this intraday chart. These lines here are pre-market data. So notice here, it gapped up pre-market. It cleared this tail, it cleared this major resistance, it cleared some resistance here, and it's at these prior highs. And it went sideways into the market open. Now notice this is the market open right here, this bar, and it just blasted up all through this pre-market resistance, through this resistance. And if you were in our green trading room, actually, with the broader market ETFs gapping up to resistance like this, we actually told our traders, get a cup of coffee. We are just going to watch to see what's going to happen. Are the bulls going to step up and drive it higher? Or are the bears going to come in and start shorting again, where we might, get at least a gap fill or a continuation lower based on the daily chart? Well, as you can see here, the bulls took over. You should not be putting on bearish option positions based on this 15-minute breakout. In fact, in the green trading room, we actually were recommending selling out of the money naked puts on the spiders that expired last Friday. And we gave that recommendation to our subscribers in the weekly options trader, which specializes in selling short-term options and spreads using the charts that expire 10 days or less. So again, regardless of what methodology you use, whether it's TastyTrade, whether it's fundamental, whether it's fib retracement, I don't care what methodology you use to try to trade and invest in the markets, using chart analysis to help with a bias is going to significantly increase your odds of success. Our Master Trader Live, my partner Greg Capper and I, who is the most phenomenal technician that I know, we have our Master Trader Live, which is every Wednesday at noon. We are going to dedicate it to, can technical analysis really predict price action? TastyTrade adamantly says no. Please tune in and we are going to show you how we adamantly say yes. And in fact, we do not take any trade whatsoever, stock or option, unless we have a bias on the underlying. The link to this show is below, so please sign up for it. It's coming January 16th at noon. And then on January 24th, we're actually going to follow it up with a more detailed analysis of the different approaches between Master Trader and TastyTrade. And it's not only just TastyTrade. I'm not picking on them. What we're trying to do in an educational format is for those mechanical traders who don't look at charts. We just want to present to you our approach so you can assess not only which one might be better suited for you, but to take the components of our methodology and add them to the TastyTrade and other mechanical option traders' approach, so you will have better odds of succeeding. Finally, we love selling credit spreads around the charts. Go to mastertrader.com/spread trader. We have a great 5-module course to get you started on a silver package. We have a mind-blowing 12-module course on mastering advanced credit spreads. And then platinum, through request of our subscribers, it's the mastery course plus 3 months of our green trading room and our weekly options trader, where we focus on these types of trades every single day. If you want to continue to receive valuable information on trading and investing, please subscribe to our YouTube channel and hit the like button if you'd like to continue to receive information. Good trading, everyone, and see you next time.